Hey everybody, Matt and Ryan here with Duckett Ladd Dental CPAs, and today we are going to be talking about PTE, the pass-through entity tax, what it is, and how it can help you. So, Matt, let's just kick it off by going through what is PTE?
Yeah, thanks, Ryan. So PTE stands for Pass-Through Entity Tax. It's a workaround that came out after changes to the federal tax law a few years ago. Depending on your situation, it can be a pretty valuable planning tool. So basically, this allows you to expense some or all of your personal state tax through the business. And it exists because of one big change, which was the $10,000 cap on state and local taxes, or SALT. So if you've ever heard somebody talking about the SALT cap, this is what they were referring to. So the tax bill that passed last July raised this cap to 40,000, but only for taxpayers under a certain income level.
Yeah, so even though that cap was raised, you still could see a lot of dentists phasing back into the $10,000 cap, or you may have even more than $40,000 worth of state taxes, in which, in that case, it still would be beneficial to do the pass-through entity tax. So, yeah, good overview there, Matt. So who's eligible for this?
So who can pay PTE? We have a few boxes to check on this one to make sure it makes sense. First, you have to be set up as a pass-through entity. So if you're the shareholder of an S corp or a partner in a partnership, this applies to you. Second, we want to make sure the practice is profitable, right? So PTE is driven by the net income from the business. Each state will let you pay a certain percentage of that PTE in relation to the net income. So if you're having a break-even year, or maybe you had some equipment or a build out that puts you in a net loss position, this might not be the year to use that strategy. And third, you must be in a state that allows the election. So if you don't have income tax, you can't pay PTE. Having said that, there are some states, Pennsylvania comes to mind, that haven't passed PTE legislation.
Yeah, so this is really geographic dependent, what state you live in, if it's eligible in your state. Maybe you're in a state that doesn't have state income tax anyway. This won't pertain to you. But if you are in one of those states that has state tax and does allow the pass-through entity tax, how would a business owner make that election?
Yeah, that's a great question. And again, it really comes down to the state. So for some states like North Carolina, just simply paying a PTE estimate qualifies as the election. In other states like New York, Louisiana, for instance, you have to file a separate form to make the election. But whichever requirements you have to follow, it's important to keep in mind that that PTE election typically is binding. So once you make it, you're locked in for the year. So planning is really key here because you don't want to lock yourself into this unless it's a good year strategy wise.
Yeah, this will be something you need to consult with your CPA on, as every state is different. That kind of leads to this next question. Every state is different on this one too. But when are those PTE taxes due? Do you have to make estimates? Can you wait until the end of the year?
Yeah, this is one where you want to consult your CPA because, like you said, it is different state by state. So, in California, for instance, entities have to pay $1,000 or 50% of the prior year liability by June 15th. In some states, that first estimate's due in March. Typically most states will require quarterly estimates, and they're typically due in uh, March, June, September, and January. One thing I wanted to point out is that regardless of when that fourth quarter is due, we typically advise our clients to make that final payment by December 31st of whichever year we're in, because that way we're able to capture the federal tax benefit in that year and we don't have to kick the can into the next year.
Yeah, yeah. I mean, we try to accelerate those deductions if we can into the current tax year rather than waiting until January to make that final Q4 payment. But if there is a residual balance, let's say you had a great December and you had more profit than we anticipated, and you do have a balance due. Typically, March 15th is kind of when that final payment is due if you want to avoid any interest and penalties for paying late. So Matt, we're coming to the end here. Let's just kind of put a bow on it. What ultimately what's the main benefit to practice owners when they do PTE?
Yeah, so to give a good example and make the numbers easy, let's say you're a practice owner, your practice generated 500,000 in net income this year, and your state will let you pay PTE tax on that at 5%. So we'll take 5% of that net income, or in this case 25,000. We'll pay it through the practice's PTE tax, and this will lower the pass-through income of the practice, which lowers your taxable income. In the top tax bracket, that 25,000 saves you a little over 9,000 in federal taxes, so a good chunk. Percentages in each state are different, so this benefit can add up pretty quickly. At the state level, there will be some sort of provision to make sure the PTE income isn't double taxed. Some states will allow you to exclude the income subject to PTE tax from state taxable income. Others allow a credit on the personal return. It can get a little hairy there. So, however your state does things, paying that PTE will handle a lot of the state tax that you would have paid personally otherwise.
Yeah, yeah. So, kind of just at the end of the day, we're talking real tax savings here at the federal level if you're able to make this election. Consult with your CPA, see if your tax situation makes sense to do this election, if you're in a state that allows this election, and hopefully it can save you some taxes. So until next time, thanks, Matt.
So, yeah.